Friends, how are you? Igor Pechkovskyi is here with Windermere Bellevue Commons, your trusted real estate professional on the Eastside, Bellevue, Seattle areas, and the King County, Greater King County. Friends, today I have a lot of good information for you, probably extra more than ever because the price has been changing, the market been changing. We've seen price reductions. There is so much to discuss. I'm gonna show you numbers. I'll start today's video a little bit different. I'll tell you how did we get here, because usually people forget of what the last 2 years look like, where we stand today, and in the end of this video, I'll make a prediction of what you should expect in the next 2 to 3 months out of real estate. And will be really helpful if you were thinking about possibly making a move and maybe purchasing or acquiring your first real estate or any kind of real estate here locally, or if you were thinking of what to do because the market is uncertain and you might be thinking to liquidate your real estate. Stay tuned until the end of this video because we'll cover it all. So get your popcorn, get excited. It will be a really good market update. So 3, 2, 1, let's go. Friends, there are lots of talk out there about recessions. I'm sure that you heard about recessions left and right, everybody talking about it. So people think, are we gonna have another recession? Is it, what's gonna happen? Let me tell you, we are in recession already, okay? The prices have dropped. I'll show you specifically how, but I do believe it's a good thing. We should have had some correction, but before I tell you where and how did we get, how's it going? Let me tell you, how did we get here first? Let's go back to 2020, really quick. 2020, COVID starts, uncertainty. Nobody knows what will happen, everything on a shutdown. Our government decides to start printing money and give everybody $1,400 checks. Do you remember that? So, of course, they wanted to help the people that probably not gonna watch this video, but they printed trillions. Bunch of that money been stolen, bunch of went to rich. Some people made it to the money, to the people. Some money made it to the people, but most of it went to the stock market. So the stock market ballooned, and over the last year and a half, another thing that they did is they lowered the federal interest rate to 0. It's not the mortgage rate, but federal rate. So the rates went down to 3%, 2.75%. So over the last year and a half, we had a crazy skyrocketing of prices for the simple fact that somebody had $50, they had it in the stock market, it became $1,050,000. So the down payments that buyers had, they would come mostly out of the stock market, not because people produce some goods or services, but because they got rich overnight over the last year and a half in the stock market. So they would take 200, 300, half a mil, 50, 60% down payments. Whatever their down payment would be, it would come out of the stock market. They would leverage it at 3% interest rate to buy a house, right? So money are poorly made up. Take it from the stock market for your down payment, 3% interest rate, buy any house, be it 2, 3, 400, half a mil over asking. That's how we got to mid 2022. And the party is officially over now. So that's how we got here. That's why the prices ballooned over this time in the stock markets, in real estate, everywhere. Out of the stock market, cheap money, buy real estate. So where are we right now? Opposite. The stock market is down. As you probably have seen a lot of articles, Microsoft is down 25%, Amazon 25%, Facebook is down, Netflix lost a bunch of value, Tesla, all the stocks are down. So the buyers' down payments are mostly not there. And what you have on the other side of things, interest rates are not 3%, they're almost 7%, which is huge, right? So I know it's a weird thing to say, but I do believe it's a good thing because our inflation today is 8.6%. So why they doing this? They're just trying to get a grip on inflation. And there are a lot of reasons for inflation. No matter who your party is, we would have this inflation either way. We have a war, we have a bunch of money printed and so on. So they have to do something to decrease the inflation. And that would be increase interest rates. And the reality is, they should have increased it gradually over the last year, 2021, but instead there was like, it's out of our control, raise it up. They're at 7%, like almost at 7%. I don't think that those interest rates will break the market. They're not going to break the market, but we will see more inventory. more prices reductions. I'll tell you why in a second. And more pricing correction. That's what we're gonna see, but let me tell you how. So before we go in numbers, here's what's happening over the last month and a half. Let's talk about buyers and let's talk about sellers. Sellers, two types of sellers. Type number one, they call me, Igor, oh my God, market is going down. I should sell, what's gonna happen? I'm losing money. Let's sell. So first of all, I always respond, you didn't make that money to start with, right? It's not your money. It's not like you lost money in your bank account. You had 100 grand and then it reduced. It's just equity, right? It's paper money that you might have some reductions. So let's just be real. Like you didn't really lose money, but that's the seller number one. Seller number two is, hey, it seems like there is more inventory coming up and I wanted to move for quite some time. So now I could actually see the place where I could go. So let's sell this house and buy that house. That's my seller, two types of the sellers I get right now. Let's talk about buyers. But on the buy side, buyers have two problems. One, the interest rate problem. They simply do not qualify for the same amount that they qualified 2 months ago, right? So interest rates were 3%, now it's 7%. So if they qualified for $1 million, they probably at 700,000 now. If they qualified for 1.4, they're at 1.1 and so on. So there is pure math. Mathematically, the prices will change because interest rates are different and buyers simply do not qualify for amounts they qualified before. That's one. And two, the buyer's confidence is out of the window. Am I making the right decision? Is this a good time? Let's wait and see. I don't know where the market is. I just lost my down payment. Companies are laying off jobs and so on. So this is what the market is. Two parties. One, increase in inventory. Two, decrease in buyers' activity. With that being said, let me show you where the numbers had been. And let's, in the end of this video, we'll try to make sense of what most likely going to happen. So with that being said, Eastside numbers, let's see it. So the Eastside market update. Let me tell you where we are now and I'll compare to where we were a few months ago. So first, inventory. As you could see, we are 1 month of inventory increased from 0.3 to 1 month. The two type of sellers I just told you about. Now we're at 1 month of inventory. Let me tell you a few things. It's still seller's market, okay? So let's be real. So we have 1 to 3 months of inventory, seller's market, 3 to 5, balanced market, 5 months plus buyer's market, okay? So 1 month, it's a seller's market. Before you get too excited, those interest rates, in my prediction, not gonna break the market. There will be more inventory, but there is not gonna be too much. Go back to my last video where I talked specifically about the inventory, because one thing you gotta understand, if those sellers don't get their number, a lot of them, they have an option to rent their property. And believe me, there are a lot of renters out there. If you're renting the property, you know what I'm talking about. It's hard to find a rental, and rental prices went up big time with inflation. And the other thing is those buyers that don't qualify, they gotta rent. So, and those sellers that maybe would not be able to sell their property, they refinance. They're at 3% mortgages right now, so they definitely can rent. So we definitely see here an increase in the inventory. 1 month is amazing. I do believe it will go up a little bit more, but I don't believe we will have too much inventory where we go to 5 months or we in buyer's market. But that's the inventory. So median price 1.590. The thing is, just the last month we were at 1.7 million, and I'll show you, there is a slide for that later, but we're at 1.59, which is still really, really high. And this is an interesting one, over asking. So 66% of houses on the east side still sold over asking, which is a lot. I mean, we're always kind of trailing back 30 days because those are May numbers. We don't have June numbers yet, but 66%, which is still reduction of activity. Median difference from the list price, 11%, and average days in the market still 5. How do we still have, and I say, hey, prices dropped, how do we still have over asking 66%? The reality of it is the listing agents, what they do now, they artificially lower the listing prices lower, right? Let's say the highest comp is 1.4, so now they list the property at 1.2 to still had over asking and hopefully multiple offers, and that's where the number's coming from. But it's still a very active seller's market. So let me show you, I always have some special slides for you. Let me show you an Eastside year-to-date 2022. Let's go back. Let me refresh your memory. So look, May 1.59. But April was at 1.722, right? So it's a big, I mean, it is a reduction of what, 130,000, which is significant. This is that seller number one that calls me, oh my God, I lost 130,000. And I'm like, dude, you didn't even make that money, right? Like, it's all subjective, but it's not about that. So still 22% year over year increase since the last year. So I think even if we drop another 10%, we're still going to be in appreciative market. That's what my true belief is. We're not going to have a massive correction, but the prices are correcting. And as you could see on this slide, if you compare, all the above the list, amount above the list, medium price, and so on, all of the numbers are pulling down, and the months of inventory available went up to 1%. So that's a very, very good news. So back to median close sales price between 19 and 2022. This is an amazing slide that you could see. We always had this ups and downs, ups and downs, ups and downs. So we've been in March 2021, we went down a bit, then we went flat. Then second half of the year up a bit, went down, and then the second half of last year, we just skyrocketed all the way to 1.72, and we're back to 1.59. My prediction is we're not gonna see an Eastside median price at $1 million anymore. Okay, let's just start there. But if we would go and drop 10%, and let's just say we land somewhere to 2021 prices where the median be at 1.3, I think that would be really significant. Will we get there or not? We'll see, but I doubt it'd be $1 million median price based on this graph. But 1.3, 1.4, very much likely. We'll see. So percent of listings sold above the list price, bright blue is 2022. As you could see, we are lower compared to 2021, and we have some decline, and I think we will probably see that 66% number decline a little bit even more. We'll see where that will level up and how the market does. But historically, we entered real estate correction, not as deep as the stock market, and I don't think it will be. But hey, interest rates are at 7%, so or 6.5%. It had to correct, and I'm quite honestly pleased with those numbers. Let me show you Seattle. So Seattle market update. Seattle kind of surprised us. When we have the east side go like that, and I kind of joked that Seattle is kind of trailing behind, now it's quite opposite. Like Seattle had a sharper decline, and Bellevue has a sharper decline, where Seattle is relatively staying flat and staying put. So median still at $1 million, pretty much same as the last month's, $1.025 million. Inventory, not that big of an increase, 0.6 of a month. I mean, it's a very ridiculously low amount of inventory. And if you look over asking, median difference price from the list price, 13% higher than on the east side. Wow. So Seattle is doing really, really good. Average days on market, 6 days. It's going well. Let's compare historic numbers. So if you look at year-to-date numbers on Seattle, they're relatively the same. There is no decline. As of right now, like $1.25 median sold price compared to $1.20, you kind of started in December of last year, just up. January was a little down, and then we leveled up, reached the $1 million, and it's relatively just stays there. The months of inventory available, same thing, not that much more inventory, 0.3, 0.6, 0.6. We'll see what the next month is, but Seattle, let's just say, stable. And if you look at percent of listings sold above the list price, again, 2022 is bright blue. It's relatively the same graph as we had seen, over the last years. Usually you have the spring all the way until the summer are the most equity gaining months, right? Market starts February, go. And around summer, July, August, people take vacations, so it's a little bit slower, and it just goes, in a decent shape until the end of the year, holidays and all of that. So it's relatively the same. Let's look this time to King County. I switched things around a little bit. I dropped Snohomish. Let's look into King County and let's wrap it all up. So King County market update in 2 words: stable. If you look at median price right around the mill, King County grew so much, right? It all starts at the core, West Bellevue, and it just goes all around it. And King County been doing really, really well, $1 million. A little bit more inventory, 0.7 of a month, right? The Eastside is probably the main contributor to that. So inventory been increasing, and we had still almost 70% of offers sold over asking in May. We'll see how the June will do. 11% median from list price, 5 days on the market. Guys, you see I'll tell you here soon, but look, we still are in a seller's market. It's a still very strong seller's market, even at 7% interest rates. So as you can see, King County is doing remarkably well. So let's just go and let me try to answer you a question of what might happen in the next 2 or 3 months for the buyers, for the sellers, and let's see how I do. All right, I know it's a lot, but be with me. Let's summarize. So looking into the next couple of months, what most likely going to happen? I do believe that inventory will keep on increasing. I don't think it will be a drastic increase, but it will keep on increasing, which means that probably prices will go down a bit more. My prediction, the bottom of the bottom will be if we decrease the median to 1.3, that'd be probably the lowest it could probably go. We'll see, but I do believe that prices have a little more to go down. Then interest rates most likely will keep going up again. So the Federal Reserve said that they would keep increasing and have a few more rates increases because they just have to do something about that inflation. They will keep increasing interest rates, but I don't think they will break the market. That's my prediction. And so here's what you can do about that. If you're the seller, look, you still will do fine. I mean, guys, I know that we all expect the house to sell in 3 days. It will take a little bit longer. You do need to know who you hire because they can't just dump it on the market and get 20 offers anymore. So working with a professional like us is critical for you, but you still will sell fine. You guys make good money over this run over the last 4 or 5 years, and you will be having a positive equity when you sell. If you're the buyer, guys, this is your chance to actually buy. You could be waiting for prices to drop, but it goes hand in hand together. So price drop, interest rate goes up, right? So your payment's still kind of the same. I always say you can change your interest rate, you cannot change your price. So if you find the property you like and you can get a deal, which you can get a better deal than 6 months ago on that property, I still believe it's worth buying. I mean it. We were looking for a property in Bellevue, another one right now, because when if not now? Like you all were waiting for the shift, for the change. I'm buying stocks right now, and we're gonna be buying more real estate right now as well. So if you can find something good, keep buying, because remember, most likely this thing is for the short period of time. When inflation will start going down, Fed will start decreasing interest rates, and you'll see stocks going up again. You'll see interest rate, real estate will start pick up again, because we're simply not gonna have too much of inventory. That is my prediction for the future. Reach out to us. I'd be happy to talk to you about everything. Let's keep monitoring the numbers. I'll have another market update for you relatively soon next month. And yeah. So friends, if you like this video, I know it was a long one, but I just wanted to share all of this with you because there is so much going on, and I have so many phone conversations with my clients and friends and everybody curious about the market. This is how we got here. This is what is happening. This is where we're heading. But honestly, I'm quite enjoying this. I mean, we should have this little correction. I like the movement. I like the shift. It is an opportunity to buy, actually. But just remember, sellers don't have to sell. They can rent their houses. Their interest rates that they locked over the last 2 years are ridiculously low. Rents are up. They can rent it. I don't think we'll have a ton of more inventory, but we are having more inventory, and that's a great thing. So if you like this video, please subscribe, please like. I really try to get you the best information I could possibly have, and please comment, let me know how you like this video. It means the world to me. I'm not a professional YouTuber here, but trying our best. We are real estate brokers and investors first. So thanks, like it. Igor Pechkovskyi, your trusted real estate professional with Windermere Bellevue Comments. See you next month. Bye-bye.